Hi everyone, welcome to this live coverage. As usual, I'm here with Yohay Elam from Forex Crunch, and in the background we have Mauricio Carrillo from FXStreet producing. We are here to cover the ECB economic policy decision. So hope we can help you go through this event today. How are you, Yohay?
I'm doing great. All set. I hope we have surprises. How are you?
I'm fine. Also expecting a surprise, hoping for a surprise.
Yeah.
I'm thinking the market may save some bullets for next week. You know what I mean? For the
Yeah.
Fed, of course. But indeed, I really hope Draghi pulls something out of his sleeves and give us some entertainment today.
Right. Me too.
What
Hope.
market is expecting?
Expecting an announcement about the quantitative easing program, the QE program. It's expected to end, set to end in March 2017. That's 3 months from now. And the big question is, what's next? Do they extend the program of 80 billion euros per month of buying government bonds beyond March 2016, or do they they continue buying but at a lower pace, tapering it down? I think market expectations are for somewhere in the middle of, 6 months extension of this program, as they did in the past. They extended it from September 2016 to March 2017. So I think that's the baseline expectation. But Draghi has been relatively quiet about what they're going to do. So that's why I hope for a surprise. What do you think?
Yeah, I do think that I was thinking particularly that if Draghi does not extend quantitative easing for at least 6 months, which is what the market is thinking, the market will begin to think of tapering again, right? Remember, we had some comments of tapering a couple of months ago, and everyone ran to buy back the euro. And I'm not sure if Draghi wants to give that message, the message that they are getting ready to taper quantitative easing, because at the end of the day, all of the quantitative easing that we have been seeing through this last almost 2 years has had little effect over the economy, right? Inflation is well below that 2%, right below 2% target inflation of the ECB. So actually, he will try to prevent himself from giving a too hawkish message. And I believe that if he somehow extends the program for more than 6 months, it will be taken as dovish in the market, and we will probably see the euro falling back, right?
Yeah, yeah, that's the baseline scenario. This is my what I did yesterday in my show. Basically, 6 months extension. It's basically priced in. If they begin tapering in March, it's euro positive. If they extend the program by 12 months or more, it's of course negative. And but he may surprise us, extend it and taper it, or any other kind of combination. They also
Yeah.
have some rules about what they're allowed to buy, not allowed to buy. They might change these rules. So maybe surprises there.
Yeah, that's a possibility, and a rate cut further into negative territory for deposit rates is another one. But I'm not sure if Draghi wants to embark in cutting rates further. And I don't think it's healthy to loosen those rules and start buying junk bonds, right?
Yeah. Well, if they loosen the rule about currently the ECB buys bonds that have a minimum yield of minus 40 basis points. That means this includes very expensive German bonds.
Yeah.
But some bonds have yields which are even lower, minus 0.5%, minus 60, and they cannot buy them. So if they loosen these rules, they buy more from Germany.
German, yeah.
But they could also loosen the rules to buy more from Greece, for example.
Yeah.
And it's very delicate politically.
Yeah,
So
exactly. Okay. Anyway, would you like to take a look at the euro
sure, go
and
ahead.
you think about it?
Euro dollar. Well, it has moved up from the lows. We have seen a big correction of the dollar. It took some time after the big rally. Currently, we're just under 108. I still have 108.15, 108.20, which is an old line from March, as resistance, but also watch out the round number of 108. Further above, we're back to levels last seen before Donald Trump was elected, and that's for me 109.50. No, sorry, that would be 108.50, then 109.50, yeah. And then, of course, much higher levels above 110. And to the downside, what I see is 107.10, also an old line from December last year. And then the biggest line for me is 105.20, which was the line seen in December, I think. A long time ago. Yeah, we've seen it after the referendum this week. We've seen an attempt to move under this line, but that was a false break. So what lines are you watching?
Yeah, I'm watching pretty much the same levels because the 38.2% retracement of that 12.99 high we see post U.S. election, although brief, right? Fibonacci measure from there to this 504, sorry, the low we had this month. The 38.2% retracement comes around 810. So I agree with you with that level. And above that, my next resistance comes around 840, 860, that price zone, because if you take a look at bigger time frames, you will find out that the pair has bottomed there pretty much for most of 2015 and 2016, right? We had a couple of breaks below them, that level, sorry, but they were quickly reverted. So if somehow the pair managed to settle above it, it will be pretty bullish for the euro and can go up to 900. And those are the levels I'm thinking for today in the case we have a re-election. And well, it's pressuring 800. Market is so happy buying the euro today. Anyway, and to the downside, there's a short-term support around 760. Below that, I'm thinking of 700, but I'm thinking more of 660, that price zone. I do believe that below that level, the pair will probably resume its downward move. Seems a lot of, from current level, a lot of hopes for an euro that doesn't move that much lately, except this last couple of days. But well, it's a possibility.
Yeah.
The pound has posted a nice comeback after falling yesterday. Yesterday and the day before, right?
Yeah, lots more excitement in the pound. I mean, usually, but on normal days, yeah. 126.70. What lines are you watching there in the pound dollar?
I'm watching Fibonacci retracements. Sorry, give me a second. I will try to put it there. Okay, there we are. Because from that latest decline, the pair corrected the 50%. Sorry, no, that's not what I'm watching. Sorry. Let me remove this if I can. Okay. Sorry. Here. Okay. So, okay. I'm watching the pair has corrected the 50% of that rally we had post softer Brexit expectations. You know what I mean? The pound recovered lately because there were comments both from the UK and the European Union talking about the possibility of the UK remaining in the single market by paying a fee or making a contribution to the Eurozone. But anyway, that was the reason why the pound recovered. So and that's we have this pullback this week, but in the 25.70 level, it's the 50% retracement of such rally. So I do believe that that's a key support, right? And that this strong bounce we have is telling us that the market is still willing to buy the dips in the pound. So that's what I'm looking for right now towards the upside. I know we topped around 27.70, But I do believe that it's July monthly low around 27.95. So that's a key resistance for me. If we manage to get there and break higher, there's scope for a run up to 30 in the upcoming days, of course, in GBP dollar.
We have the decision right now.
Okay.
And no surprises, right? No surprises, no change. No change, main lending rate 0%, negative deposit rate remains -40, and euro dollar is jumping. What's going on?
Yeah, the market take it as hawkish. Not much of a change. Up to 8.30 so far. And there we go.
Maybe there's been some special announcement.
Let me
Anyway,
check.
euro dollar is shooting higher. Wow. 108, almost 50.
Okay.
Yeah, 108.50. I'm trying to find information.
Not seeing much so far.
No, but euro dollar
Is skyrocketing. 870 and counting. Okay. It's adding to dollar weakness.
I wasn't expecting anything now, only at the press conference, and certainly have some action.
There's not much of a reaction in other mayors.
No,
Of
it's a
course.
euro story.
It's, yeah.
So what's going on? Let's see if there's anything in this short statement. They announced. Okay, regarding non-standard monetary policy measures, the Governing Council decided to continue its purchases under the asset program at the current monthly pace of 80 billion until the end of March 2017. From April, the net asset purchases are intended to continue at the monthly pace of 60 billion. So that's tapering until the end of December 2017 or beyond.
They reduced the amount of buying?
Yeah.
To 60 billion instead of 80.
Oh, but euro dollar is already falling back down.
Until the end of December 2017. From April to December, okay, 60 billion. So, yeah, they extended for more than 6 months, but they reduced the amount of monthly purchases, somehow understood as the beginning of tapering. But the dollar is back.
Yeah.
Against most of the, take a look at the full screen, right? The dollar is back up against most of its major rivals, but of course the euro, which pulled back to 800 and now it's struggling to regain the upside.
Yeah, they said that they can increase the program in terms of size and or duration. But yeah. I think markets are looking at tapering.
Yeah, I'm not sure why the market is so thinking about tapering when nothing it's actually telling us that, except by the rumors we have 3 or 4 months ago, right?
Yeah.
Anyway, gold is plummeting because the dollar is strengthening harder against safe havens. Take a look at the dollar Japanese yen. It jumped 50 pips higher. Also quite impressive move in there, but on the wrong side.
So 9 months, but 20 million. Yeah. So if we do a quick math, I think markets, if we're expecting 6 more months worth 80 billion, that would be 480 total. And now we have 9 more months of 60 billion. So that's 540 billion. So the total is higher.
The total is higher. Okay.
Yeah, but spread out.
yeah, somehow the ECB has give signals that they are going to reduce the amount of bond purchases, and they are thinking of retrieving uh, quantitative easing. But of course, we are a year away from whatever they plan.
Yeah, so quite a surprise, I would say. I mean, announcing it now.
Okay, the dollar positions keeps advancing, but really nothing significant because it has been trading around 14 for a couple of weeks already, and I'm pretty convinced that we are not going to see any relevant breakout in this particular one until the Fed.
Oh, we're back down.
If you take a look
Under
at
108.
Okay. Yeah. In the euro, you mean?
Yeah, the euro. Yeah.
Okay. Nice reversal formation going on there. If it closes below the low of this candle, which it has been 782, there's a good chance that it will continue falling, right? How are stocks taking this? Nothing. No reaction in European equities. I can't see much of an action, barely an uptick in the DAX, and though it's flat, like if it was a holiday, to be honest.
In Spain, it's a holiday today.
Yeah, in here too. Sure, what happened to my gold chart? Okay, there we are. Oil is struggling around 50, but well, not much there. Okay, we have Draghi's speech in something like 30 minutes or so. So the market will probably wait to see what else he has to offer. But
so far, so good.
Yeah, so far so good. Yeah, the pound, it's losing ground. Aussie, yeah, Japanese yen, everything's going down against the dollar. So, well, maybe it's something like buy the rumor, sell the fact, right?
Yeah. They did both things. They extended and tapered. But it's not exactly like tapering down that the Fed did, that they tapered down until they stopped. It wasn't they just lowered, I mean, one time lowering and then continuing at a lower level for a longer time.
Yeah. I don't know. I can't see the ECB tapering right now. It's not, of course, in a year. I don't know. Things are not doing so good for the ECB to decide to cut its stimulus programs. It took so long to the Fed to do so. And the ECB act so late, done so little at the beginning of the crisis. Well, Let's hope Draghi give us a clear picture in his press conference.
He'll say happy holidays, that's for sure.
Yeah, they will meet in 6 weeks, right? There's no
Yeah.
February next meeting probably, or by the end of January.
At the end of January, I think.
Okay.
And we got, well, there were some reports a few weeks ago that they might not make a decision today, but push the decision back to January.
Okay.
But that was apparently wrong. We did get news today.
Yeah.
I'll also add that today we'll also get new forecasts.
Yeah. We get the forecast today. Oh, that will be okay. They're
Inflation
entering negative territory for the hourly candle. The market is,
we're falling back down.
Yeah, 100 pips lower from the peak that make after the announcement. Pound is down to 26.60. It has a strong support around 26.25. So if it lost that level, there's not much in the way until the low around 70, 25.70. And the Australian dollar is not telling me much at this level. So what do you think about the LC? It has been very what?
Aussie dollar, well, in the past few months, it's been a bit slow. So
yeah. But it has fared pretty well with gold plummeting, dollar strength, and everything.
Yeah.
Yeah. Because it has been holding in 74, 75, not moving far away from those levels.
Yeah, a bit stuck, I would say.
Yeah. Okay, right there we go with euro falling further.
Wow. So we have over 100 pips in euro dollar today. That's good.
In 10 minutes.
Yeah. Good days. Yeah.
Good old days. Anyway.
Yeah.
For one afternoon. Okay.
Both Valeria and I were frustrated for, well, in many occasions in the past year or two. Yeah.
Okay, let me check if we have some questions.
Question about Aussie dollar, so we talked about that. Question by Siva. Is the data negative for the euro? You want to answer or?
Yeah, no, go. Sorry.
Oh, yeah, he had something to say. No?
In fact, I'm thinking that it's not actually negative. It's quite mixed because the quantitative easing has been extended further of what the market was thinking, but the amount of bond purchases has been reduced, and somehow it's telling us that Draghi feels more confident, right, over the future of the euro area, and he's willing to reduce the amount of monthly purchases, right? But of course, the market is not seeing that at this point. So the data seems positive, but the year is going down anyway. Your thoughts?
Sure. I mean, the negative case for euro dollar is that, I mean, in this decision is that the total purchases planned is higher than markets had thought. I mean, it's, again, the calculation is 9 months instead of 6, and a total of 60 billion instead of 80. If you look at the bottom line, we have 540 instead of 480. But I don't see. I mean,
yeah, it's really insignificant at the time of the program. It has been running since March 2015, so we are getting closer to 2 years, and well, it has been extended by 9 more months. So it's a bit of change. Some
Yeah,
change. Loose change, how do you call it?
small change. What is 60 billion euros between friends? Yeah.
Yeah, it's Belgium. Okay, not much more news, sorry. There's, okay, initial jobless claims alongside with the release at the beginning of Draghi's speech. So,
Quite a nice move on EURUSD. Already 130 pips.
yeah,
It's a decision.
Japanese yen, it's battling with what, 14 so far, but rejected. Okay. Okay. In the meantime, until we wait for Draghi, what do you think about the OPEC deal? Do you think they will achieve their target of reducing oil production?
Well, if they want to, they'll have to implement it. If they want to keep it stable for longer, I mean, it's currently at $50 WTI, and it was around 45. So they did achieve something, at least with the announcement, at least with reaching a deal. But now they'll have to, well, two things. They'll have to get Russia and Kazakhstan, maybe other countries, to join in, and eventually to really implement it. Now, for the longer term, the US shale industry will pick the slack. Less production from OPEC means more production from the United States. But there is such a high inventory of oil storage, crude oil, gasoline, distillates, everything,
Yeah.
that I think we should make an effort to bring it down. Otherwise, if in a few months' time, if in February, March, April, we'll see that they didn't taper, they didn't reduce production, then I think oil prices could suffer badly because there's just too much oil floating around the world. And
Yeah, I have upload my weekly chart because it's the plummeting here. The U.S. oil has been trading below 52 since early July, meaning 52 being the top and the 42 area being the bottom of the comfort zone. And with the OPEC announcement, right, we reached the top of the range, but pulled back, right, because of course, what you just have said, invest in stocks building up, not only on oil, but derivatives and distillates and all the materials related. So, but there was a meeting this weekend led by the OPEC. They have invited 14 non-OPEC countries to join the cartel, to try to get them into the deal. And I'm not sure if they will, but that could push the price above 52. But we really need to move above it to see a steeper recovery in oil prices. And it will probably depend on this meeting. And of course, in the Fed, because if the Fed strengthens the dollar, I don't see much of a chances of oil running away. It has been holding ahead of the OPEC, but it has been temporal. It won't resist dollar strength. If the dollar decides to come back, or the market decides to buy back the greenback. Okay, lower lows for most mayors following the report, but not much. Now they are going to enter in wait and see mode ahead of Draghi's word. We are going to have them in the background, so we will hear live.
Mauricio is our producer, taking care of that.
Do you think the euro could fall below the 200-day moving average in the in the 50-minute chart? Someone's asking. Okay. To be honest, I don't follow those long moving average and short-term charts. But let me take a look and see if it's actually doing it right. So uh, I do believe that the long moving average are more relevant when we are talking about uh, longer time frames. To be honest, in the 15 minutes, there you got it. Okay, it has broken below it. So somehow on the shortest, the 20 is crossing below the 100 above the current level. So this is usually a sign that the downward strength will continue, but we're in the middle of a huge event, so things can change quickly. I always said technicals are great, except when we have central banks and payrolls, you know,
Yeah,
at least,
that's when things break down.
yeah, the market passed from technical readings when we have central banks or payrolls in the ES. Those are the only events that really can distort any technical reading, and you can see a pair jumping from overbought to oversold or the other way around, breaking the moving average and retaking it back. It's a wild time. So
Yeah.
mm,
We also add that
I
those
have
are less. Sorry.
I mean, I have to be honest, I was not expecting an 870 today, and we had it. Okay, someone's asking, what is your near-term outlook on gold? What's your take, Yohay? I can share mine, but
And gold.
on gold, yeah.
I don't follow gold that closely. Just know it fell quite a lot, but there is eventually some bottom. I don't have any. I did have this level in the past, 111.70, and below that 111.56. But I think you're following gold much more closely than I do.
Yeah,
So
I do see it clearly bearish, right? In the latest moves we have, the consolidation we are having in here, it's because we are getting close to 1100, 1150, which is closer to production cost, So despite this still bearish, I do believe that the downward momentum with it will ease. I'm not seeing breaking too much lower. I do believe that any approach or break lower towards 1,000 will be seen by the market as a buying opportunity at some point. Of course, gold will not depend only on whatever the ECB that ends up doing today. In fact, Mario Draghi, I do believe that gold is being driven purely by the Fed. So if the Fed actually moves rates next week, we are going to see a sharp decline on a daily basis. It's priced in, but not all of it. And in the short term, I have a support around 60. We have bottom all these last few days. It's quite a messy area. And to the upside, 82 is the level I'm watching because I believe that above that level, the commodity can recover a bit, correct higher on relief, but really not seeing any upward potential, any serious upward potential.
yeah, I see here a question about the Kiwi dollar. So Kiwi dollar chart I'm showing right now, we're currently at 71.85. We're seeing if here two highs, and the second one is lower, and now it looks like we're forming a third lower high. The trend in general is that the pair peaked out back in the summer here in the northern hemisphere, winter in New Zealand,
Yeah.
and since then it's trending down. I would add more levels here, 72.65 and 73.60 and 74.15, but I think the trend is more to the downside. So 71, the round number of 70, and 69.50, which worked in the past several times as support. So what do you think, Valeria, about the Kiwi?
It's it's my goal. I don't follow it
Yeah,
much.
okay.
I will
Okay,
converge
so,
with you.
all right.
uh, I don't know why. We all have our favorite pairs, and
And we're all angry with EURUSD, but not today. Not today.
Yeah, not today. Not today. It's pretty interesting, right?
Yeah.
We complain when it doesn't move. We complain when it moves. So far, at bottom around 730. Uh, I I do see a key support around 690. So if we take down that level, remember, guys, there's a good chance that we can go even lower. Not probably not today, but during the upcoming days, those sessions. What do we have on the calendar for Friday? Okay, Michigan. That's probably the most relevant in the US. Okay, trade balance in UK and trade balance also in Germany. Okay. Okay. On Friday, over the upcoming Asian session, we have Chinese inflation. Okay. So I do believe that Chinese inflation will be probably the most relevant report of the day.
Yeah, for the Australian dollar.
Yeah. If it's really good, above expected, it can hit the dollar back. The dollar take a hit earlier today from strong exports and imports figures for November for China. It was a big upward surprise in there. Okay. I'm amazed that stocks are not much reacting after yesterday's rally. Though is pretty much doing nothing.
Yeah, we have a question here about S&P. I don't follow the stock market closely, but as we know, the stock market rallied, and also yesterday, and in general after Trump won, hopes that Trump, with controlling also the Republicans controlling both houses, he can deliver on his promises for lower taxes and crazy spending. I think that stock market will continue being supported, bid, upbeat, at least until the inauguration on January 20th. And then eventually, at some point, reality will bite. And of course, like any politician, and of course Trump, which promised many, many things, there will be a gap between promises and reality, and then we might see a significant correction. But what do you think?
I do agree with you in that. The gap is always huge between promises and okay.
Yeah, even if you take more serious politicians than Trump, then you always get broken promises.
My charts. Okay. This is Dow Jones, the one I follow. Oh, okay, I can change it to smaller time frames. Okay, no problem. It has reached 19,500 yesterday, and there we are, stuck in there with futures doing little so far.
We have another question here from Christos. He asks, I am long Canadian dollar yen, target 86.90. What do you think?
Canadian dollar, long.
Yen, CADJPY.
Ah, I have to take a look at that chart. I'm not usually following that. Do you have it handy?
No, I can pull it up. I wanted to say the Canadian dollar did enjoy the OPEC decision, and the yen, of course, as you always say, Valeria, once it picks a trend, it never stops.
Yeah.
So it's been nice. The target has been, according to the question, 86.90. Well, currently we're quite close, so currently 86.25. It's not a chart I follow.
Oh, yeah, me neither. Sorry, I know I have to add some of the crosses. I like the GBP10. That's a pair I follow a lot. It's pretty interesting how it moves and how it reacts to to avoid this alongside with the rest. Okay.
I would say regarding Canadian dollar against the yen, dollar-yen is currently under 114. So if we get another strengthening of the US dollar and against the yen, then maybe CAD Japanese yen could move up to 86.90. So it's not that far away, but yeah, but again, the big line that I see here is 88.70. Anyway, that was the high back in April. Our main story of the day, main currency, euro-dollar, the ECB's rate decision. For those of you joining now, the ECB decided to extend its bond buys to December 2017, but from April to taper it down, to cut it down, to reduce it from 80 to 60 billion per month. So they did both things. Their initial reaction was euro-dollar shooting higher to 108.70 and then falling all the way down to 107.30, currently at 107.53, and we're waiting for the press conference by ECB President Mario Draghi in around 15 minutes.
Yes, markets. Mayors have quieted down. Okay, there we are, back to my charts.
So what can we expect from Mario Draghi after he actually made this announcement? The big news is already out. What do you think he can do?
You're asking me?
Yeah.
Wait, don't do nothing. Wait for Draghi until he speaks and says whatever he wants to say. You just remind us that we're going to get some forecast also today, and while there won't be a shock from the already shocking decision to change quantitative easing, the forecast will probably move the market more in a certain direction. Those asking if they should keep going short with the euros, wait for the forecast. If it rates growth and inflation outlook, then yeah, the euro will probably fall. But if he upgrades them, we can go back to the highs.
Yeah, I think he will be asked quite a lot if this is, sorry, a dovish move or a bullish move. If tapering means the situation is getting better, or extending it means the situation is getting worse. And let's see what he says. So far, at least on euro-dollar, after the dust settled, we're lower ground. That means that you want, well, what markets think now, at least, is that extending it by 9 months is expensive.
I'm losing you, Yohay. I'm losing you. It's your sound voice.
Sorry, I'll try to repeat what I said. So far, it seems markets look at the 9-month extension as the main deal.
Yeah.
And euro-dollar is falling. That means it's been extended for a bit longer than expected. And the tapering from 80 to 60, that means back to the original scale of the program, is less significant. But let's see what Draghi says.
Yeah, we're 10 minutes away.
Mm-hmm.
Pound was unable to settle above 127. The Aussie is still having trouble to regain 75. Dollar Japanese yen is back to 14. The euro, well, the euro it's playing a different game today, but overall there have no been any relevant breakout in the market. And I do believe that the market is quickly changing its focus towards the Fed next week, when we are still not over the ECB. Lately, and I mean the last 2 or 3 years, the market has been quite wild in that spot, because it didn't change so fast, or it didn't turn so fast to the next event. But lately, we are looking so much forward that sometimes you may get lost in the way. Okay, waiting, it's almost over.
Yeah, currently 107.50. Things have stabilized in the past few minutes after quite a big move from around 108 to 108.70 down to 107.30. Now stabilizing at lower ground. So, but actually, we're trading back where we traded yesterday, more or less, or a few hours ago. I mean,
Pretty much on a daily basis, the euro.
Yeah, recent ranges, nothing.
Nothing outstanding, except for that spike.
Yeah.
Just the 100 pip spike higher.
Great.
I'm a bit amazed of how stocks reacted in Europe to the Italian referendum. Instead of concerning about the probable collapse of the Italian banking system and the contagion it may produce in the banking sector all through the euro area, we have stocks running to fresh yearly highs in Europe this week. What do you think it's going on? The market is too optimistic at this point? Just because of Trump?
Yeah, and there are real troubles there in Italian banks, and skies didn't fall. I mean, Italy is still a country that's running and will continue to run, but these issues are still dragging and left unresolved. Things could still get worse. So anyway, if there will be a solution will still mean losses for shareholders. So yeah, I think markets are a bit too optimistic.
Because of year-end, the things will reverse in January?
Maybe, yeah. It's all the Christmas lights are making people happy. So I don't know. So about 7 minutes we'll have the ECB President Mario Draghi talking.
Sorry, well, I didn't hear you. What do you say?
No, I just said that 7 minutes to go until Draghi speaks.
Yeah. And the last bout of action. Okay, lower lows.
Oh.
Euro.
Getting nervous ahead of Draghi.
Christos Yanis says, if euro falls below 105, then I think we are going to see another long-term move to the downside. Well, indeed, the pair, the euro has a lot of lows, monthly lows, I mean, in the 500, 520 region, including the one we had last week. So it's a huge support, although Don't forget we have 460, right, which was 2016 low, 2015, sorry, low. It's around 460. So for me, that's a line in the sand. If the price breaks below it, it will probably trigger a sell-off. And I'm thinking about 200 as a probable target for that initial move. And from there, it will depend on how the price reacts. But yeah, it could continue falling. Okay, the dollar is coming back like Ben, just
USA. Yeah, 107.25. Well, will we get 200 pips on EUR/dollar today?
yeah, of course. That's normal. Okay, 5 minutes ago. Bulls be aware. Okay, to 2,245 in DSXP. It's a major long-term resistance. There's a report on FXStreet. Gold is under further pressure.
Since the US elections, things are not so good for gold. Four minutes to go. For those joining towards the press conference, this is the picture. We had a rally initially in EUR/dollar, then a big fall. Current foreground. ECB made its announcement early with the rate decision, an extension of QE until December 17, but with tapering down of bond buying, 60 billion from April. And volatility is quite nice. Four minutes, 3 minutes. I would say that the line in the sand is still, well, critical line is still 105.20 despite the breach earlier this week. And the level below it is 104.60, which is the low of March 2015. But we're far away from that. We're getting close.
Okay, let's see if we can see him live. And see his face and how he's feeling today. That's quite relevant.
Yeah, some people look at the color of his tie.
Really? Okay, that's way too much for me. But sometimes he looks tired and concerned. The color of his tie. That's a good one.
Yeah, I guess it's good.
Okay, there he is. Getting ready to start. Come on, Draghi. Give us clear clues.
Let's use jobless claims right now. These jobless claims are 258 as expected. Everything is ready for Draghi.
Yeah.
So, ladies and gentlemen, the Vice President and I are very pleased to welcome you to our press conference. We will now report on the outcome of today's meeting of the Governing Council, which was also attended by the Commission Vice President, Mr. Dombrovskis. Based on our regular economic and monetary analysis, we today conducted a comprehensive assessment of the economic and inflation outlook and our monetary policy stance. As a result, the Governing Council took the following decisions in the pursuit of its price stability objective. As regards non-standard monetary policy measures, we will continue to make purchases under the asset purchase program at the current monthly pace of 80 billion euros until the end of March 2017. From April 2017, our net asset purchases are intended to continue at a monthly pace of 60 billion euros until the end of December 2017, or beyond if necessary, and in any case, until the Governing Council sees a sustained adjustment in the path of inflation consistent with its inflation aim. If, in the meantime, the outlook becomes less favorable, or if financial conditions become inconsistent with further progress towards a sustained adjustment of the path of inflation, the Governing Council intends to increase the program in terms of size and/or duration. The net purchases will be made alongside reinvestments of the principal payments from maturing securities purchased under the APP. To ensure the continued smooth implementation of the Eurosystem's asset purchases, the Governing Council decided to adjust the parameters of the APP, the Asset Purchase Program, as of January 2017 as follows. First, the maturity range of the Public Sector Purchase Program will be broadened by decreasing the minimum remaining maturity for eligible securities from 2 years to 1 year.
Okay.
Second, purchases of securities under the Asset Purchase Program with a yield to maturity below the interest rate on the ECB's deposit facility will be permitted to the extent necessary. The key ECB interest rates were kept unchanged, and we continue to expect them to remain at present or lower levels for an extended period of time, and well past the horizon of our net asset purchases. Today, extension of the asset purchase program has been calibrated to preserve the very substantial degree of monetary accommodation necessary to secure a sustained convergence of inflation rates towards levels below but close to 2% over the medium term. Together with the sizable volume of past purchases and forthcoming reinvestments, it ensures that financial conditions in the euro area will remain very favorable, which continues to be crucial to achieve our objective.
Euro Greek.
In particular, the extension of our purchases over a longer horizon allows for a more sustained market presence and, therefore, a more lasting transmission of our stimulus measures. This calibration reflects the moderate but firming recovery of the euro area economy, still subdued underlying inflationary pressures. The Governing Council will closely monitor the evolution of the outlook for price stability and, if warranted, to achieve its objective, will act by using all the instruments available within its mandate. Let me now explain our assessment in greater detail, starting with the economic analysis. Real GDP in the euro area increased by 0.3% quarter-on-quarter in the third quarter of 2016, following similar growth in the second quarter. Incoming data, notably survey results, point to a continuation of the growth trend in the fourth quarter of 2016. Looking further ahead, we expect the economic expansion to proceed at moderate but firming pace. The pass-through of our monetary policy measures to the real economy is supporting domestic demand and has facilitated deleveraging. Improvements in corporate profitability and very favorable financing conditions continue to promote a recovery in investment. Moreover, sustained employment gains, which are also benefiting from past structural reforms, provide support for households' real disposable income and private consumption. At the same time, there are indications of a somewhat stronger global recovery. However, economic growth in the euro area is expected to be dampened by a sluggish pace of implementation of structural reforms and remaining balance sheet adjustments in a number of sectors. This assessment is broadly reflected in the December 2016 Eurosystem staff macroeconomic projections for the euro area, which foresee annual real GDP increasing by 1.7% in 2016 and 2017, and by 1.6% in 2018 and 2019. Compared with the September 2016 ECB staff macroeconomic projections, the outlook for real GDP growth is broadly unchanged. The risks surrounding the euro area growth outlook remain tilted to the downside.
Downside risks.
Yeah.
According to Eurostat's flash estimate, euro area annual HICP inflation in November 2016 was 0.6%, up further from 0.5% in October and 0.4% in September. This reflected, to a large extent, an increase in annual energy inflation, while there are no signs yet of a convincing upward trend in underlying inflation.
Okay.
Looking ahead, on the basis of current oil futures prices, headline inflation rates are likely to pick up significantly further at the turn of the year, mainly owing to base effects in the annual rate of change of energy prices. Supported by our monetary policy measures, the expected economic recovery, and the corresponding gradual absorption of slack, inflation rates should increase further in 2018 and 2019. This pattern is also reflected in the December 2016 Eurosystem staff macroeconomic projections for the euro area, which foresee annual HICP inflation at 0.2% in 2016, 1.3% in 2017, 1.5% in 2018, and 1.7% in 2019.
Okay.
By comparison with the September 2016 ECB staff macroeconomic projections, the outlook for headline HICP inflation is broadly unchanged. Turning to the monetary analysis, broad money M3 growth moderated in October 2016, with its annual rate of growth decreasing to 4.4% after 5.1% in September. As in previous months, annual growth in M3 was mainly supported by its most liquid components, with the narrow monetary aggregate M1 expanding at an annual rate of 7.9% in October after 8.4% in September. Loan dynamics followed the path of gradual recovery observed since the beginning of 2014. The annual rate of change of loans to non-financial corporations increased to 2.1% in October 2016 from 2% in the previous month. The annual growth rate of loans to households remained at 1.8%. Although developments in bank credit continue to reflect the lagged relationship with the business cycle, credit risk, and the ongoing adjustment of financial and non-financial sector balance sheets, the monetary policy measures put in place since June 2014 are significantly supporting borrowing conditions for firms and households, and thereby credit flows across the euro area. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirmed the need to take today's monetary policy decisions so as to preserve the very substantial amount of monetary support that is necessary in order to secure a return of inflation rates towards levels that are below but close to 2% without undue delay. Monetary policy is focused on maintaining price stability over the medium term, and its accommodative stance supports economic activity. As emphasized repeatedly by the Governing Council, in order to reap the full benefits from our monetary policy measures, other policy areas must contribute much more decisively, both at the national and at the European level. The implementation of structural reforms, in particular, needs to be substantially stepped up to reduce structural unemployment and boost potential output growth in the euro area. Structural reforms are necessary in all euro area countries. The focus should be on actions to raise productivity and improve the business environment, including the provision of an adequate public infrastructure, which are vital to increase investment and boost job creation. The enhancement of current investment initiatives, progress on the Capital Markets Union, and reforms that will improve the resolution of non-performing loans will also contribute positively to this objective. In an environment of accommodative monetary policy, the swift and effective implementation of structural reforms will also make the euro area more resilient to global shocks. Fiscal policies should also support the economic recovery while remaining in compliance with the fiscal rules of the European Union. Full and consistent implementation of the Stability and Growth Pact over time and across countries remains crucial to ensure confidence in the fiscal framework. At the same time, it is essential that all countries intensify efforts towards achieving a more growth-friendly composition of fiscal policies. We are now at your disposal for questions.
Ms. Jones.
Bravo, Draghi.
The euro plummet to 660.
Two questions, please. Could you tell us if any other options were presented in today's meeting, and if so, what they were? And could you tell us, please, as well, whether the decision today on the QE extension and the changes to the design were unanimous? Thank you.
Good question.
Yeah.
Thank you. Yes, the two options that have been presented were the ones that have been studied by the committees in the preceding months. One foresaw the option of continuing with 80 billion euros a month for 6 months, and the other one is the one that that received a very, very broad consensus by the Governing Council. Thank you.
Mr. Canepa?
Not unanimous.
Francesco Canepa, Reuters. So, when you decided to buy bonds with a maturity of less than 2 years, how do you plan to deal with buying below the deposit rate?
Okay.
In the minutes, you said, the chief economist, I think, said that any change would have to make economic sense. So what's the economic benefit of buying bonds that yield less than 40 basis points below zero? Thank you.
It's also a big announcement.
Thank you. First of all, let me say that what I said it during the introductory statement, but it does need some emphasis. The purchase of securities under the asset purchase program with a yield to maturity below the interest rate on the ECB deposit facility will be permitted to the extent necessary. So it's an option. It's not a necessity. And as a matter of fact, the relevant committees will look in January and in the coming months when this could become a necessity. So it's more to sort of give an option for continuing a smooth implementation of the program than for any other reason. Now, about the general involvement of the ECB with financing needs of the governments is, frankly, there isn't any difference here. We operate on the secondary market as well. It's just nothing changes. We've changed the maturity, but nothing else. Okay.
Just a small change.
Alessandro Speciale, Bloomberg News. Mr. President, first of all, a question on the reduction of the pace of purchases from 80 to 60 billion per month. Could you tell us why you felt necessary to ensure this second option, this more sustained market presence? And so what was the rationale for this decision? And the second one is, you said that, I mean, as you just said, as to the extent necessary, it could be possible to purchase below the deposit rate. The fact that the committees still have to study this, does it mean that this is not immediately an option? And what may be the conditions that make it necessary under? Are there going to be caveats? Are there going to be some sort of limitations in doing that? And what sort of instructions would you give to the committees? Thank you very much.
Thank you. Now, on your first question, first let me say that we have to go back to March 2016 when we revised our program from 60 to 80. And at that time, the outlook for a return, for a sustained return to our inflation objective was much darker. And deflation risks were not immaterial at that time. So at this point in time, we basically judged that the outlook as far as the sustained return to our inflation objective is not very different from what it was at the beginning of the program when it was scaled to 60. And more specifically, the risk of deflation has largely disappeared. However, uncertainty prevails. Uncertainty prevails everywhere. And we certainly see and assess the progress of the overall situation at the end of 2017. But since uncertainty prevails everywhere, that's the reason for this sentence in the introductory statement that says, if in the meantime, the the outlook becomes less favorable, or if financing conditions become inconsistent with further progress towards a sustained adjustment of the path of inflation, the Governing Council intends to increase the program in terms of size and/or duration. Now, this means two things. First of all, the Governing Council is acting in a pragmatic and flexible way to cope with risks that may materialize in this period of time. Second, that there is no question about tapering. Tapering has not been discussed today.
Okay, there we go.
Now, on the second point, I have to refer to the committee's work on that point. As I said, this is an option, not a necessity, and the committees will assess when it should become so, when and if it should become so. As you know, the amounts of purchases and the maturities of purchases do depend on the current constellation of rates. And as this changes, so it changes the necessity to buy certain maturities rather than others. Thank you.
Okay, I do believe that we got most relevant already, right? Yohay, what do you think? Yohay, are you there? Anyway, I do believe that we got the message from Draghi. Tapering was not considered despite the initial spike up to the upside in the euro. That suggests the central bank was getting ready to taper, and that's why we're getting the euro breaking lower. The outlook for inflation, the outlook for growth have been slightly, barely revisited, in fact. But the truth is that the risk remains towards downside in the European Union, and that's the message we get, a pretty dovish one. I don't have you.
Sorry for the disconnection. Can you hear me now?
Yeah, I can hear you now, sorry.
So, had some technical issues. Anyway, what a ECB, Draghi was full dovish, removing one of the rules about the limit of the negative deposit rate. He stressed it's an option, something they will necessarily use, but of course this makes the, together with another move of loosening, makes the program very, the move really dovish, more money is going to be printed and with less limits. Euro dollar have a range already of 220 pips today. Quite impressive.
Yeah, as you said, and I told you, yeah, we're going to get it. I was joking, but we did in fact got it, thanks to a really dovish stance in coming from Draghi. Anyway, I do believe that it's time for us to make a wrap up of whatever happened today. So if you want to start, it will be great. It's pretty much what we have been saying, right? It has been quite dovish, and the speech, gave us clearance of what the ECB was thinking.
Yeah, so we had a big move today from the European Central Bank. They announced that they will extend the program from March 2017 to December 2017, but from April it'll be at a lower rate of 60 billion. The original scale of the program per month, instead of 80 billion, the euro dollar shot up, then fell down. Draghi also announced a few things. He announced that the deposit rate, -40, not a limit anymore to bond buying, if I'm not mistaken, from January, which is just around the corner. And he talked about downside risks. The forecasts haven't changed that much, but the repeated talk about downside risks, the removal of this limit, the willingness, general, the tone, December 2017 is not necessarily, not at all, the end of the program. He said it's not tapered. And the back end can increase the size of the program, they can extend the program. All in all, very dovish. If we had doubts if it's dovish or not with the 45 minutes earlier, now we have the full Draghi dovishness, and euro dollar reacts 106.46 at the moment. Over to you.
Yeah, I have to agree with you. If there was any doubt, it was clear that with the press conference. Bottom line, the euro area is in trouble and will be in trouble for longer. And the ECB will keep on easing regardless any suspicions the market may have of tapering, right? So, what do you think we could expect from the American upcoming session? For me, I would set for the dollar strength because the market is not only getting a dovish Draghi, but thinking of an upcoming hawkish Fed, right? So beware, guys, because the pair, the euro dollar in particularly, has already moved over 200 pips daily basis, but I don't think it's over. I think that we could see lower lows still. And right now that we are trading in the 640, 650 region, well, maybe the pair may consolidate a bit in the short term, but if we break below it, 600 comes as the next probable bearish target. Okay, there was no discussion of tapering, and that's what outstands for me today.
No, what? Sorry, I didn't hear your last sentence.
There was no discussion on tapering, so that's what it outstands for me from the speech. Regardless, they reduce the amount of bond purchases monthly basis for 9 months. It's irrelevant.
Yeah, one anecdote that Draghi said, he said that it was asked about if the program, if the decision was made unanimously. It was not, but so there was another proposal. The other proposal was 80 billion, and to keep it at 80 billion. Maybe it was his proposal, and maybe 60 billion was sort of a compromise. We're extending it. We're removing the deposit rate limit. So maybe that was kind of a compromise. But the general message is that the ECB is going to buy, and
Bye-bye.
Bye euro dollar. Yeah.
Bye euro. Yeah. I agree with you. Anyway, thank you everyone for being here with us. Thank you, Yohay, for sharing this time with us. As you know, guys, live coverages in FXStreet continue. Next is Dr. Sivaraman. So if you can join, it would be great. Thank you, everyone. Thank you again, Yohay, and see you soon, okay? Next Wednesday, maybe?
My show is next Wednesday, and we also have the Fed next Wednesday, right? So
yes.
It's going to be lots of fun.
Yeah. Okay.
Last big event of the year.
Thank you, everyone.
Okay.
Bye-bye.
Thank you. Bye-bye.